if you had to give up this one luxury so that you could increase your real estate purchasing power by $100,000, would you do it? So I just want to start off. I've had like major technical difficulties with this video today. So if this is the third time you're seeing this live video, that's why, and I'm very sorry. I do like to repeat myself. This is a difficult conversation, and I think it's kind of an Alberta thing, but there is this one little luxury that we really, really love in Alberta, and it's very expensive. It creates what I call net consumer debt. It doesn't pay you back, but it's very enjoyable, and that is our wheels. Now, I have lots of friends and family in the car business. I have nothing against driving a nice vehicle. I love nice vehicles. Who doesn't love new car smell? But I like new home smell better. So this is the choice that some folks are having to make. Car or house, nice car or house. Drive an older, cheaper car and get a house, okay? Here are how the numbers shake out. If you have a car payment, it adds to your debt servicing ratio, and that reduces what you can qualify for when getting a mortgage. Now, I know what a lot of you are saying. Karri, I'm paying $1,600 a month in rent. What a waste of money. I want to put that toward a house. What's the big deal? Well, your landlord isn't doing a deep dive into your finances. They really don't care if you have a big car payment as long as you're making your monthly rent. A lending institution, however, does care about your car payment, and they do care about your debt servicing ratio, which is a fancy way of saying how much of your gross income is going toward servicing your debt every month, because that has an impact on your ability and predictability to carry a mortgage. And banks and lending institutions do not want to foreclose on your house. They do not want to own real estate. They just want to know that you're going to pay your mortgage every month like clockwork for a very, very long time. And if you've got too much debt, you become a risk. So I'm going to give you an example of one borrower who doesn't have a car payment versus does have a big car payment and how that affects what they can buy. So our first borrower, no car payment. They just have $250 a month in student loan payments. Lots of people have that. They make $75,000 a year. They can get a great interest rate. Maybe they're putting 5% down, so it's an insured mortgage. They qualify for almost $350,000 mortgage. That's great because in a city like Lethbridge, you can probably buy a pretty decent detached home in a nice subdivision and be pretty happy. Now, borrower number two, all the same variables, same income, same situation, except they went and bought a shiny new pickup truck and they now have a $650 a month car payment. Boom. They qualify for about $245,000 to $250,000, $100,000 less in mortgage. Now, maybe if you're in the Greater Toronto area, $100,000 less in your budget doesn't seem like a lot. If you live in Alberta, $100,000 less makes a huge difference on what kind of real estate you can buy. In Lethbridge, it might mean that you have to buy a townhome instead of a detached home, or a house without a garage versus a house with a garage, or a condo versus a single family residence. Okay, so it's not right or wrong to have an expensive, awesome vehicle that you love driving, but is it worth it to you to be able to buy less house or maybe not a house at all? So these are the decisions you have to make. We can't have our cake and eat it too, but you can control whether or not you have a huge car payment every month. And that's the big one. That is the big one. The other thing to think about is cars and trucks don't go up in value. Now, the used vehicle market is pretty strong right now, but you're not going to see an appreciation in value on your vehicle. When you buy a house, Real estate historically, without fail, over time goes up in value. It holds its value and then goes up in value over time. So if you want to get into a home, you need to think long and hard about the luxury of driving a shiny new vehicle, and is it worth it to you to either not get a home at all or buy a lot less home than what you had hoped for. If you have any questions at all about how to strategize for your mortgage, just call or text 382-7335 or look me up at karriflatla.com. Remember to like this post and like or subscribe to my channels here at Facebook and YouTube. In the meantime, have a terrific weekend. We'll see you for next Friday Fire. Take care.